This was a check I received in 2023. It was my federal tax refund. You may look at this and go, oh, Tejas, congratulations, you just got a lot of money back. So why the ominous music? Well, to get a refund this large means that in 2022, I wildly screwed up my taxes and was basically out of $20,000 for the entirety of 2023. I did finally get the money back, but for about half a year, I was in a pretty painful financial pinch. I keep this check as a reminder of how uneducated I am in this space. And the more I talk to my friends, the more I realize that most of you all are too. Like, think about it. This is a bill that is guaranteed to come once a year and on average takes out like 30% of our income. So how are we this vulnerable when it comes to this subject? To make sure that this doesn't happen again, I finally decided to take the last month and go into the nitty-gritty of taxes and make a video. The objective, how can you walk away from this video with confidence in taxes? Something school should have taught us. So we'll go over a couple things. Number one, why they exist. Number two, the terms you need to know. 3, how saving on American taxes actually works. The biggest misconceptions in taxes. And lastly, at the end of this video, I'm gonna gift you all our proprietary estimated taxes visualizer. It's a tool that this channel's resident financial expert Craig and I spent hours on. One that'll help you see how your tax bill would change given some different variables. And the best part is, it's for free, so stay tuned. Okay, one last thing before we push the gas pedal. All of the information in this video is for educational purposes only. None of it should be construed as financial advice. Everyone's situation is specific to them, and if you're looking to make financial decisions, always consult a professional. Okay, are we ready? We'll start easy. Why do taxes even exist in the first place? Okay, that was unexpected. So the more I grow up, the more I realize that to fully understand something means to be able to explain it in your own words. And as if your audience is full of 10-year-olds. So let's rephrase the intro to this bit. It's, why do taxes exist as if you're 10 years old? So as you know, we humans don't live isolated. We like each other's presence and we do things like trade and trust each other. And when a lot of people come together, that's what we call a society. And with a society that relies on people's trust, that means we need to have rules whenever someone breaks that trust. For example, let's just say there's this town of 10 people. For now, let's call it Tejasville. Sadly, someone in Tejasville decides to attack another person. Huh? Ugh. Well, that's obviously not a good thing, so the other 9 people in town decide, we need security. We should create a way to make sure we're all protected. And let's call that person a police officer. All those in favor of making Shervin a police officer, say aye. Aye. So they make townsperson Shervin a police officer. And Shervin's like,
but who's gonna pay me?
says Officer Shervin.
It's not like I'm protecting just one of you, I'm protecting Tejasville.
After that, everyone looks at each other and says, all right, well, I guess we all should pitch in for this guy, this police officer to protect us. Let's give our money to this thing called the government and let the government pay Shervin. And that's how taxes started. Well, not historically, but theoretically. So we as society today have to pull together part of our income for public services. And there's 2 main categories to where this money actually goes. Number 1, to promote the well-being of society. These are for things like public safety or environmental protection, or things like redistribution of wealth. And the second thing is to decentivize the wrongdoings of society, like making cigarettes and alcohol more expensive because they're unhealthy, or making sure companies don't pollute too much. Or funny enough, in Denmark at one point, they had something called the fat tax, which is a tax on like sugary processed items. And that's why today, people in Denmark, they all look like models. Taxes are what we pay for a civilized society. So taxes get complicated. As you probably know, there's a million different terms and things that are there to remember. And that gets overwhelming. Honestly, it's probably the main reason why most of us haven't looked at it as much as we probably should be. But after spending 2 weeks of just solely concentrating on taxes, I came up with something that should give you a bit of hope. When I look at taxes as a whole, it falls into this like 80-20 principle. For the average person, 80% of what you need to know actually just falls under a couple terms. And the other 20%, which holds a lot of that nitty-gritty, is really for professionals only. So you can get to 80% the way there just knowing a couple of things that we'll go over in this video. Okay, but first, what are the types of taxes? Well, there's a couple of things. I'm sure you've heard of sales tax, property tax, capital gains, all these terms. But whenever someone talks about your taxes are due on April 15th, they're mostly talking about your personal income tax. And that's what this video is gonna focus on. All right, let's get to it. Let's talk terminology. But instead of it feeling like I'm just gonna talk as if I'm reading a dictionary, I've got something a bit more exciting planned. Ready? Let's first talk about the three types of income taxes. First, we have federal income tax. This is a 7-bracket system that every person in America has to pay, but we'll get to that in just a bit. Next is state income tax. In most states, except for 9 of them, this is another tax that every citizen has to worry about. And finally, we have local/city income tax. This is one that not everyone has to worry about. I live in New York City, so I basically have to add 3% onto everything. We'll make sure to put a link in the description so you can check if this applies to you. Okay, so now that you know the 3 buckets of taxes that you may have to pay for, let's go on to how do we calculate this? First, you take your total income. This is your wages, your dividends, your capital gains, tips, rent, stock, basically everywhere you make money. But this number is not what you get taxed on. You actually get to subtract a couple things. Those are called adjustments or above the line deductions. These get a bit granular, so I'll just write them down. But one way to save taxes is not to ignore them. For example, if you're a student and you have student loans, you can actually subtract the interest on your loans from this total number. Okay, once you take your total income and you subtract those adjustments, you get to a term that is on most tax documents, and that's called adjusted gross income. But funny enough, this still isn't what you pay your taxes on. You get to subtract one more thing, and that's called a deduction. More specifically, the below the line deduction. When you get to this step in your taxes, just remember that there's 2 options. You either get to take out a standard deduction or an itemized deduction. And the whole point of these deductions is to make sure that there's still a part of every American's income that isn't taxed, just so we can live. But then there's the itemized deduction. Basically a more specific separate way that can actually increase that number so you can pay less taxes, but it's a bit more work. And actually 90% of Americans just take the standard deduction because it's easier. You don't have to track receipts throughout the year. But again, if you want to look for a place where you can save money, this itemized deduction is a place where you can look at. So now if you take that adjusted gross income and you subtract either your standard deduction or your itemized deduction, you get to what's called your taxable income. And this is the number that gets taxed. Okay, now that you know how you get your taxable income, the next step is to understand tax brackets. Probably the most misunderstood concept in all of taxes. I usually hear this term in the context of how rich someone is. Like, damn, that person made a lot of money. They're in a different tax bracket than I am. And this part is actually correct. If you make more income, you unlock a new bracket that has a higher rate. And these rates go from the government takes 10% of your income all the way up to 37%. But here's where people get things wrong. They think that if they hit a higher tax bracket, that all of their income is taxed at that rate. So welcome to the Estimated Taxes Visualizer. Again, this is a spreadsheet I'm going to give to all of you at the very end of this video, so stay tuned, but it's the easiest way for me to explain the federal tax bracket system visually, because I built it, and it was the easiest way for me to understand it. To explain how the tax bracket system works, for this example, I'm going to put in that my adjusted gross income was $1 million, $13,850. And as soon as I do that, you will see down here, this page will change. The second question that'll matter is, are you married? I currently am not married, I'm single, so we'll keep it at that variable. And then because again, we're talking about federal tax only, it doesn't matter what state I live in currently. So how does this work? Tax brackets are super misconcepted. People think, oh, $1 million hits the highest tax bracket at 37%, that all of their $1 million is going to be taxed at that 37% rate. But that's not the case. On the left side here, this shows you the 7 different brackets, the thresholds on the left, and their rates on the right. If I made $1 million in taxable income, the way this works is that the first $11,000, because that is from 0 to 11,000, is taxed at 10%. Then the next $33,000 of your $1 million, that's taxed at 12%. And this continues all the way until you get to the very final tax bracket, which is at 37%, where every dollar above $578,125, that's what's taxed at 37%. So out of that million, this amount is taxed at 37%. Now this might be a little confusing, so I'm going to change that number above and see if this part makes sense. So instead of $1 million, 13,850, let's just say it's $195,951. This is your adjusted gross income. Again, you'll see that this whole interface changes. Your taxable income after you take out your standard deductions, $182,101. $11,000 of that is taxed at 10%. $33,000 is taxed at 12%, and it goes all the way up until you get to this 5th bracket right over here. Because our taxable income is $182,101, and the bottom of this threshold is $182,100, that means that the only part of your income that is taxed at the 32% rate is $1, not your entire income. And by the way, these thresholds right over here change depending on if you're married. And I can do that right over here. If I click yes, you can see that these numbers right over here changed. Okay, if all of this sounds confusing, don't worry, because this estimated tax visualizer will be in your hands at the end of this video. I promise you, once you play around with these variables, you'll soon understand how this works. So the first step in not being like 2022 Tejas, who messed up his taxes, is learning the basics. And that's the main purpose of this estimated taxes visualizer. It's a tool that Craig and I built that's meant to be a simulation device. The goal of it is to have you play around with the different variables, whether that's how much adjusted gross income you've made, what happens if you get married, or if you decide to move to a different state. There are 3 parts to this tool. The first is a simple tax bill calculator, basically adding up your estimated federal and state income taxes. Next is the federal tax bracket visualizer, you saw this earlier, but it's to see how your adjusted gross income falls into the different brackets and how that progressive tax rate works. And finally, my favorite, which we really haven't shown yet, is this state income tax dashboard, this comparison device. It's basically this green and red board that shows you, given the same adjusted gross income, how much income tax, state income tax you'd pay if you lived in any one of those 50 states. It compares all of them. And District of Columbia. Something I assumed is that no matter how much you'd put in that adjusted gross income, that it would all move linearly, but that's actually not the case. The third sheet, which is something you can see but not meant to be played with, is a place where you can see the different rules for every state. Okay, basically, once you get this tool, play around with your adjusted gross incomes and see how things change, whether you put 10,000, 100,000, or $1 million. See how things change between states. Okay, so at this point of the video, you're probably like, what's the catch? Why are you giving this to us for free? And I'll tell you the catch, because nothing in this world is purely for free, and I'd rather be transparent about my self-interest. This tool is technically monetarily free, but it is behind a 5-minute survey that's just for me. It's a survey to help me understand you all better, my audience. If you watch my last video, I discuss how impressive it is that Cody Co is able to segment his audience. Basically, he's able to understand their likes and their wants and needs, which helps him build a better business. And I think a downfall of many YouTubers is we all try to just maximize views without really understanding who's actually viewing our videos. And this is my first attempt in understanding who's behind the screen. And so this survey is exactly that. 1, to help me understand the demographics of this audience. But 2, I have some more open-ended questions that I'm really curious about. And again, all of it is to help me make better content for you. None of this data is going to be sold to anyone else. It's purely on a Google form that I'm going to read through, and I'm going to read every single one. And also Craig's self-interest. If you're a viewer of this channel, you know how instrumental he's been for the financial portions of these videos. He basically just left his job at a top 5 private wealth management firm to start his own thing. He wants to bring some of those services that that were only for ultra high net worth clients to us, young professionals in our 20s and 30s. So that's his catch. His information is on the estimated tax visualizer if you want to look for a professional for your financial situation. That's it. We've laid out our self-interests, and all that information to get the estimated tax visualizer and the survey is in the link in the description. Okay, I hope you enjoyed and found this video helpful. In the comments below, let me know how your tax season goes, and maybe you made a mistake that you want to share with everyone. Could help all of us. But in general, if you enjoyed these educational explainers or educational adventures, check out this one right over here, or consider subscribing because I have way more to come. Until next time.